What's up everybody? Welcome back to my channel. This week I'm coming to you from my living room and I wanted to talk about taxes that you may have to pay if you're selling your home. Now, before this video even gets started, we have to talk about you
talking to a tax professional. This is what I know as a realtor, but again, if you sold your house this year and you're doing your taxes in April, then talk to somebody, go to H&R Block. This is my own research on how you as a seller will be paying taxes on the home that you sold.
Wait until the end of the video and you'll see just exactly how you can try and avoid paying taxes. The tax that you pay in the state of California is a capital gains tax. Capital gains is the profit that you made on your home from the time that you purchased the home to when you sell the home. So let's say, as an example, you bought the house at $200,000 and you sell the house for $800,000 and you make a profit of $600,000.
Congrats to you.
The profit margin is different on two levels. If you are single and you make $250,000 or more on the profit, then you pay taxes on it. If you're married and you make over $500,000, then you pay taxes on that. The way that you won't pay taxes if you're an individual is that you have to make less than $250,000. If you've owned and occupied it for 2 years or more, you won't pay the same tax. And same goes for when you're married. If you make $450,000 profit instead of the 500 or more, then you won't pay. And as well, if you've lived in the house as a primary residence, it's considered owned and occupied the home for the 2+ out of 5 years, then you will not have to pay the tax. The way that your 250 if you're an individual, 500,000 margin if you're married is out the window is if you are selling an investment property and you're not doing a 1031 exchange. A 1031 exchange with an investment property, let's say you own a duplex and you are ready to sell. It's 2021 and everything's going way too much over asking price. So you're trying to sell it off. You're not gonna buy anything else. You're keeping the profit that will be taxed. If you're selling that duplex, let's say, just to make it easy numbers, you sell it for $800,000 and you put that profit, let's say you make $300,000 off of it, you put that profit into another property of similar or greater value, that will be
tax-free, or at least a tax deduction, whatever your finance professional decides to call it.
But yeah, if you're selling an investment property and you're not doing a 1031 exchange and you're keeping that profit, then that will be considered taxable. If you have not owned the home for 2 years or more, then that's considered a tax. Our house itself, we bought it as a short sale in 2019, and seeing the prices going crazy 2020, 2021, we've highly considered selling, but due to the taxes, we cannot sell until December of 2021. If we were to have sold this year, like let's say we list the house tomorrow, sell it in a week or whatever, then we will get taxed because we did not own the home for 2 years consecutively. The only exception is that if you're military, disability, or foreign service, or any other form of like literally can't live in my house type thing. If you've already claimed a home within 2 years, let's say you sold a home in March 2020, and you were able to claim that $250,000 or less, then you got away with not having to pay taxes, and you try to sell another house the next year, you will not be able to get around the taxes because of the fact that you already claimed one within the last 2 years. If you sell the home within 2 years, you are required to pay a short-term tax, and in the state of California, that is an income tax, and that's based off of your income bracket. So I don't know how to explain that because there's so many different ones, but every state is different. If you sell your home at a loss, it is not considered a tax deduction. Now, 3 ways that you can avoid paying taxes when you sell your house is that you can live within the home for 2 years at the minimum. Let's say you live in the home for 2 years, 2.5 years, just to make it easy. You live in the home for 2.5 years, you profit as an individual $200,000, you are tax-free. You can try and qualify for an exception if it has to be work related, usually military with this, health or unforeseeable event. You should definitely check with a finance professional if you do or do not qualify for an exemption. Also check with the IRS. I am linking below the publication 523. It is very dry and very long, but it'll give you all the if, ands, ands, what's, who, what, when, where, and why of taxes when selling a home. Also keeping your receipts. This is on the side of a real estate perspective or a realtor perspective. If you are getting ready to sell your home, whether you're going to pay taxes or not, keep the receipts of what you did to the home, because your value is based on the purchase price and the improvements. You renovate the kitchen, all the bathrooms, you get brand new appliances, all new flooring. Keep the receipts for that, because all those improvements will help sell your home. All of that is value in your home, and it's things that a new buyer will not have to do, which is why a lot of the time when you talk to a realtor about something, when sellers are talking to a realtor about selling their home, you hear a realtor say, well, we need to paint your house. Have you thought about redoing the kitchen? All of these things are things that are not just for you to waste money, but it helps you raise that purchase price of your home. So yeah, these are different taxes that you will have to pay as you're selling your home. Again, individual, don't go over 250K. Married, don't go over 500K. If you can do it, if you're selling an investment property, try to do a 1031. If you qualify for an exception, ask a tax professional. But again,
ask your tax professional before you just take my word for it and think that you're just going to click through H&R Block in April and get away with selling your home and not paying a dime, because you never know. I'm not a CPA, tax professional, none of that.
I pay somebody to do my taxes for me. So again, please like, comment, and subscribe. I hope this helps, and if you want more, hit that subscribe button. Let me know in the comments below what else you want to know about with real estate, because I'm here to help. Thank you.